Hello, everyone. Welcome again to today's episode of Policy and Profits. I'm Anthony Esposito of Ascalon 6 Capital. Thank you. A little humor to start the episode today. It's been an interesting week, and there has been no shortage of headlines, of topics, of new data, of spikes in volatility, really, over the past 6 to 12 months, which should not be a surprise. We are going to talk today about the BLS statistics that have come in, some more job revisions, which are egregiously striking, the errors that have gone on, and the lack of accurate data coming out of the BLS is actually, at this point, just confusing. Numbers were adjusted down by 911,000 jobs from April of 24 through March of 25. So that essentially is the last year of the Biden administration. So I want to dig into why the BLS is marking these numbers down, what this really means, and how do we get out of this? How do we get to a spot where the data is actually accurate and the confidence comes back to the U.S., the data, the markets, and our financial system, which is really, really one of the things hanging in the balance here. So we'll go to the first clip, which was actually the report on Fox Business just yesterday.
This data covers from April of 2024 to March of 2025, and it shows the end of the Biden administration was possibly not as big in terms of job growth as first thought of this. Now, the Biden administration, they created in this period 1.76 million jobs. So the 911,000 will be subtracted from the 1.76 million jobs, which comes out to 849,000, showing the Biden job growth not as strong as first thought.
So I appreciate the comment there, the Biden job growth not as strong as first thought. What it actually shows, what this shows is not only was the job growth not as strong as first thought, there was no job growth. Let's be very clear. There was no job growth in the final year of the Biden administration, which was an election year. To be this wrong, this egregiously wrong, could not be, in my opinion, pure incompetence. Or maybe it could be. Maybe we're just tapping the wrong people, or Biden was tapping the wrong people to fill seats during his tenure as president. Absolutely, absolutely out of the ballpark wrong at a critical time in history where we were in the fourth year of a presidency, which was very questionable to begin with, and an election year. No job growth. Let's go to Scott Bessent. He was on with Kudlow. Let's see what he had to say as far as what the Fed looks at now moving forward.
If the Fed says they're data dependent and the data has been atrocious, then it seems like there's probably some makeup cuts in order here, or the size of this month's cut needs to be recalibrated. And sure, it can be fixed. Anything can be fixed. You just have to we had to establish that it was broken, which President Trump did. Now we have to go about fixing it. And it wasn't working well before that. Kind of this lazy notion that they had dropped down to these low response rates, 30, 40% response rates, and they intuited the balance. Intuiting the balance is going from quantitative to qualitative. We need good empirical data, and it's not easy to get to, but you got to want to get there, and we want to get there. I think EJ is a great person to do it. I've known him for years. He's high integrity, data-driven, the ruthless truth pursuer.
Yeah, so obviously EJ, he's referencing to there, Secretary Bessent is referencing EJ Antoni, who was my former co-host of this podcast. Wish him all the best as he works through that process. And yes, I will emphatically second that motion. EJ is data-driven. EJ is apolitical. And EJ will get to the bottom of this and get us the numbers. Whether they're right, whether they're good or bad, they will be right? And that's what we want. But let's back up 1 second, because I think this is really important. We're looking at a BLS that has issued jobs which were revised down by 600,000 for the 23 year, by 900, and that's the final count. So that's the final revision, 600,000 lower than they stated. We're right now at 911,000 lower than they stated for 24, which was Biden's final year in office. At the same time, let's keep in mind that the jobs created under President Biden, forget the markdowns now, which are absolutely ridiculous. 80 to 85% of those jobs were government jobs, indirectly government funded jobs, or low skilled services jobs. Okay, so we had no real job growth in manufacturing and production in the country anyway. We were pushing all of the job growth to the government, and now we're marking down jobs and taking away the fake jobs that were there in sectors which we didn't even have them there in the first place. Interestingly enough, the one group, and you probably know where I'm going, the one group of jobs which were marked down the least in this most recent 911,000 job revision were government jobs, meaning the government jobs they said were created were technically, for the most part, created. Everything else was fake. Smoke and mirrors. The jobs created were government or government funded jobs. And now they're saying that those jobs weren't even there. It's an absolute atrocity. What that did was it created 2 consecutive years where there was no job growth. You can look at this chart, the revisions down for 2023, 2024, and now we're looking at recent 2024 into 25 revisions. There was no job growth. This was an absolute smokescreen. It was a head fake on the American public. Everybody bought in. And now the things that we've been talking about for over a year are coming to light. Why are they coming to light? Because there is no guard at the gate making sure no one's watching. There is no one fudging the numbers. There's no one at BLS now who's sending out a survey to get employment numbers, getting a 30 or 40% response rate, and then guessing at what the balance would be. What on earth are we doing? We are in, and we have the privilege of living in the United States of America with the most robust, the thickest and deepest financial market in the world. It is the most respected market in the world. I've been involved in finance, in investment, in trading for almost 30 years. Our regulation is top notch. Our companies are top notch. The liquidity and the depth of the market is top notch. The exchanges are top notch. If we don't have data that we can rely on, basic data on employment, where are we? Where's the confidence in this market? Hundreds of trillions of dollars in the U.S. financial market are at risk if we can't even produce a jobs number that's somewhere in the neighborhood of accurate. When you're 50% off consistently, oh, and by the way, 50% off consistently in favor of your political party. So let's talk about independence at the Fed. Let's talk about independence at the BLS. Is this incompetence or is this nefarious? I find it hard to believe that someone could be this incompetent, that the BLS could be this incapable of coming up with a number somewhere in line with the real number, or to see a methodology that's clearly broken. If you're not getting responses to your survey, you're at a 40% response rate. How on earth are you using the data? And I would love to see how you quantify your guesstimate. So you're getting 40% of the answers, great. How did you get the other 60%? Did you throw a dart at the wall, or did you actually have a process? It's insane, and it hurts all of us. Puts us in a position of weakness, which seems to be the Democrat playbook for the United States and for U.S. citizens. In a position of weakness. If we move forward, what does this do for the Fed? Well, Secretary Bessent just kind of alluded to it. What we're seeing is a jobs market which was much weaker than we were told over the course of the past few years. The Biden administration and now President Trump in office has to handle that. So we see jobs growth, which is not there. This morning we saw a PPI print, which was pretty cool, as in below estimate. So inflation looks like it is coming under control. We are seeing that as a trend on an annualized basis. So we have inflation not as much of a worry right now, and we have employment a major worry. It kind of puts we're data dependent Mr. Powell on check. So I don't know if his palms stay facing to the sky with I'm not sure what to do, or if he actually makes a call. Remember, we had the BLS printing fake numbers. We had the Fed, Mr. Powell, cutting 50 bips heading into an election in September of 24. Absolutely insane. There was no need for it then. But yet, what's your answer now? If you needed to cut back then, why are you not cutting now? I just want to know. I want to know what the logic is. You're clearly not data dependent. This is clearly skewed far to the left. Let's make it apolitical. Let's make it independent. The independence of the Fed is not in question right now because of the White House. Don't confuse the White House questioning the Fed with the White House not wanting the Fed to be independent. The Fed was not independent under Biden. Just because it wasn't spoken out loud doesn't mean that wasn't the case. The Fed was actively working in a political way, in a tilted way, to benefit that administration and that White House. The current administration wants the Fed to be independent. The current administration wants the BLS to be accurate. And that's why somebody like E.J. Antoni has been put up by President Trump to lead the BLS. And just for a second, before we move on to the market and what's next and why the market's acting the way it is, because it's pretty interesting. Erica McIntyre, I guess, was the old BLS head. She worked, I just want to go through her experience and give some idea of what the left thinks is qualified and not qualified. What was qualified for them to run the BLS was Miss Erica. She worked at the Census Bureau for 23 years. I'll say that again. She worked at the Census Bureau for 23 years, from 2000 to 2023, and then went to run the BLS. Okay, that's qualified. That passed through the Senate, no problem. Everybody was good. Passed the sniff test. She was ready to go. She was an absolute failure. Egregious. Who are they questioning? Who are they questioning right now? Is E.J. Antoni qualified? Let's take a look. Earned his undergraduate degree at St. Charles Seminary, followed by advanced degrees in economics from Northern Illinois University, where he received both a master's and PhD in economics in 2020. His doctoral dissertation focused on fiscal policy with, I mean, you could run through, I'm laughing because of how overqualified he is compared especially to Miss Erica, how overqualified he is to run the BLS. Academic teaching from 2016 to 2020 at University of Illinois. Economist, the Texas Public Policy Foundation, 2020 to 21. Chief economist and research fellow at the Heritage Foundation. The list goes on and on. E.J. Antoni is market-driven. He's apolitical. He's coming in to fix a problem that the BLS has created and sat on. If the problems and the misinformation, the miscalculations were okay, I think everyone should be okay with fixing them and moving on. It's an embarrassment what's going on, and it needs to be fixed. If we look at the markets continuing to grind higher, we got that PPI report today, which was a little cooler. That's good news. We have the jobs data, which is actually the old, bad news is good news. The market right now, in my opinion, and I can give multiple reasons why it's not comfortable to say and multiple reasons why it shouldn't be going higher. I run a top-down strategy here. I'm technical, I'm rule-based, and I run more of a macro strategy at Ascalon 6 Capital. And we've been very successful. What I can tell you is that it doesn't matter where the market should go. It matters where is the market going. Right now, I'll tell you what I see in the technicals. And this is a monthly chart, which is a standard monthly chart with some momentum indicators at the bottom. We have good monthly momentum. We've had a real recovery in intermediate and long-term price action and confirming internals coming off of the low in April. And that's continuing. So what we're seeing here is based on Fibonacci extensions, based on the health of momentum and trend, based on price action, I believe, even as I think we've hit our 21st or 22nd all-time high this year, we hit a new closing high yesterday, S&P cash. We're in position to continue that through year end at a minimum. And I think we do have around a 5% upside in the market. So that puts us somewhere around 6,700, 7,000 on the S&P cash by the end of the year. That's not me calling any fundamentals. I'm not looking at valuations. I'm not having that conversation. I have in the past. The portfolio is not run that way. I'm looking at simply S&P cash. What does price action look like with internals? We look set to move up 5%, in my opinion. Call it 6,700 to 7,000 by year end. Now, why is that? Jobs numbers look pretty bad. We have some problems at the BLS. We're not sure what tariffs are doing, all the noise, right? Well, here's the thing. The jobs numbers are in the past and the market discounts looking forward. So the market's not going to discount those jobs numbers being a disaster are actually a positive right now. Because what is the market looking for? Well, let's shift over to the Fed. Market's looking for more liquidity and lower Fed funds, right? The Fed funds rate, that shiny ball, has been in place for over 2 decades now. Like it or not, Fed market participants, investors, traders have been looking for this rate cut for months, and they're going to get it. So they're not going to look back and say, well, we were in a recession, job numbers are not as good as they need to be. And that's in the past. That's in the rearview mirror. What the market is doing is discounting further out and saying, well, the jobs were horrendous. They're worse than expected. Check that off. That's a reason to cut rates. Inflation looks like it's under control, becoming more and more under control. Check that off. We're going to cut rates. Tariffs, we're not seeing the tariffs flow through to higher consumer prices, right? Check that off. We're going to see a cut in rates. The market right now is looking forward, saying we're having a movement in the U.S. economy where private investment is coming back. Jobs are an issue. Rates need to come down. Inflation's okay. Rates need to come down. And then we have this tariff war, which has not become a war. It's actually benefiting the United States. So rearview mirror, Biden administration, a disaster. Looking forward, it actually sets up okay for what participants are looking for. Beyond the end of the year, as I watch the technicals, as I watch my models, that will change. That will shift. I don't know when it will shift, but I'll be objective and I will be data-driven and analysis-driven and model-driven, and we will be in the right position to be short or to be out of the market. But right now, the upside is there because the mess is behind us, and there's more potential upside with current policy and current moves, whether it be replacing the BLS head with somebody like or with EJ Antoni to actually straighten out those numbers, regain confidence, whether it be the Fed actually getting on board and cutting rates, improving liquidity, whether or not that's in the longer term what we need. That's what the market's looking for. The market's going to drive higher. That's it for today's episode. I do want to get into the other asset classes that I manage here at Ascalon 6, and there's only 5 in total in the future space. This is S&P cash. Everybody's watching the S&P, so I wanted to go through that today. Until next time, be well. I will talk to you guys soon. Keep an eye on that S&P 500. Keep an eye on that 6,700 to 7,000 level. I think that's a pretty reasonable target for year end. And let's pray that we get the right people in positions to fix what's wrong and what was broken in the previous administration, get us back on the right footing, get us back on the right path, and move forward. This is Anthony Esposito from Ascalon 6 Capital. Follow me at CMT_Anthony on X. You can go to Ascalon6capital.com for the website for daily reports on the S&P, media, and a summary of the fund, a description of the fund. And you can hit me directly if you'd like. I'd love to hear from you. Anthony.Esposito at Ascalon6capital.com. Take care, everyone. Talk to you soon.